So I'm Jeff Bermet, one of the co-managers of the Libero funds, and October, which is not quite over, as today is the last day of the month, has been a really interesting month in financial markets. We look like we're having a positive month this month in October. We have seen declines in many of the equity markets this month in Europe, in the UK, and in Asia. Only the US markets have rallied recently, with tech being the main driver.
We've had some really good returns from the tech names. There's been concerns about the level of AI spend and what's been going on inside these companies, and it's really about how does that monetize? Is that money going to provide a return to investors? One of the key factors we've looked at is the powering of AI, and that's really back into the data centers. Google has its data centers, and also Amazon has data centers as well. And these are areas we see for continued expansion from both of these companies.
We've seen generally good inflation news in the US, in the Eurozone, and in the UK. We've seen interest rate cuts by the ECB. We had cuts by the ECB and the Fed in September, and we wouldn't be surprised to see further rate cuts in November by both the Fed and the Bank of England, who will meet next week. All this generally still fits with our theme of inflation is now low enough that central banks can keep comfortably lowering rates. Growth remains decent. In fact, we just got data for the third quarter in the US that showed growth just below 3%. We also got some more upbeat growth on Europe just yesterday as well. So the fears of a European recession may be overstated, with the exception of Germany, where the auto sector is clearly in trouble because of consumers not liking electric vehicles and the automakers being pressured to produce and sell more electric vehicles because of environmental concerns that governments have. And China is also flooding the world with high quality, inexpensive electric vehicles, which is proving to be a real challenge.
And one of the reasons for this is the rise of Chinese car makers and manufacturers. The quality of the vehicles being produced has increased, and we're now seeing them spread their wings into Europe and their export markets. We've already seen announcements of tariffs being imposed on these cars as the Europeans and also the US try to protect their automobile markets.
China had announced a great deal of stimulus late in September and early in October, and we will expect to see more stimulus to try and get the economy moving there and overcome the problems from the real estate declines.
Jeff will mention the Chinese stimulus, and again, a case of how we reflect that in the portfolios. So in Solutions and Dynamic, we've added a exposure to China, very much a domestic exposure to China, because that's where we expect to see the government stimulus focused. We've purchased that exposure. We've also bought a couple of new positions. In Tencent we've held for a while, and that's performed well for the portfolios, and also a position in Alibaba, which again we expect to see be a beneficiary of Chinese consumerism as it picks up. Over this month we've had the budget in the UK, but one of the key factors for us as investors, and as far as it concerns the portfolios, was particularly the level of debt that was announced and the level of debt issuance to be created. Approximately 300 billion of new gilts will be issued to fund the government's commitments. A lot of focus on the amount of taxes to be raised, 40 billion, but the level of government expenditure still leaves a 10 billion gap over that allowance of taxes that have been raised. What we've seen though with the announcement of the budget is that the longer end of the gilt market yields have risen, which means the price of the bonds goes down. We've avoided that by staying in the 2 to 5 year spot, which has still maintained a much more defensive stance, still achieving a good level of return. One of the things we have done to offset that risk of the longer end of the gilt market, we purchased positions in gold for the Solutions portfolio, and that's performed well over this month and offset that kind of concerns we had against holding longer dated debt. I think we've seen a positive return of over 6% already this month for the gold position.
We are now 5 days out from the US presidential election, which will be held on November 5th. All the polling still shows it pretty much a dead heat between the current Vice President Kamala Harris and former President Trump. All eyes will be focused on the results as they come in late Tuesday evening in the US, so early in the morning European time.
So as Jeff mentioned, next week on the 5th of November, not only is it Guy Fawkes night in the UK, but it's also the US election, and we may see some fireworks after that result. but it may take a period of time to actually get a result that's finalised. Once that's come through and we see one who wins the presidential race, the balance of power in the Senate and the House of Representatives, we'll have an idea of how we think that's going to pan out for the US and wider global economy. And so we at Oak Glen will then come back to you with a election special to give you our views and thoughts and the implications that may have for the portfolios.